Let's dive right in. Today we are unpacking one of the absolute most ambitious and, controversial space stocks on the market right now, AST SpaceMobile. Look, if you follow the aerospace or telecom sectors, you've definitely felt the massive gravitational pull of this company's headlines lately. I mean, we're talking historic rocket launches, major tech partnerships, and then a sudden, hard collision with quarterly earnings realities. It has been a total roller coaster. So our goal in this explainer is to just cut right through all that noise, look hard at the data, and understand exactly what is driving this stock and what risks lie ahead as of our current snapshot in August 2026.
So picture this. What if you could get a cell signal literally anywhere on Earth? And no, we aren't talking about lugging around some bulky, super expensive satellite phone, or just crossing your fingers that you're near a ground tower. The core vision for AST SpaceMobile is connecting unmodified everyday smartphones, like the one sitting in your pocket right now, directly to a space-based cellular broadband network. They are attempting to just completely bypass ground towers to bring connectivity to the most remote corners of the globe. It's a sci-fi concept that is actually turning into reality right above our heads.
All right, here is our roadmap for today. We're going to hit Section 1, Cell Towers in Space. Section 2, Bluebirds and metabuzz. Section 3, the Q2 Reality Check. Section 4, High Risk, High Reward. And we'll wrap up with Section 5, What to Watch Next.
Okay, starting off with Section 1, Cell Towers in Space, Bridging the Dead Zones.
To really get the hype here, we first have to understand the business model itself. AST SpaceMobile isn't actually trying to sell you a phone plan directly. Their model is strictly wholesale, B2B networking. And right at the heart of that network are the Bluebirds. These are massive low Earth orbit, or LEO, satellites that effectively act as giant cell towers in space. And the kicker? They're designed to connect directly to standard 4G and 5G smartphones. No special hardware required whatsoever. The ultimate goal here is to target the literally billions of people living in coverage dead zones, while also unlocking some pretty massive government, emergency, and military contracts.
Now, when a company claims they are going to revolutionize global telecom, you really have to look at who is backing them up. And the sheer scale here is wild. AST has partnered with over 60 mobile network operators worldwide. We are talking the absolute biggest names in the industry: AT&T, Verizon, Vodafone, Rakuten, Google. By teaming up with these heavyweights, AST gets potential access to over 3 billion global subscribers. Having these telecom titans on board, that lends some massive credibility to their vision.
Let's move on to Section 2, Bluebirds and metabuzz reaching the stratosphere.
If you've been glued in the stock chart lately, you know things have been really heating up. On August 5th, 2026, a SpaceX Falcon 9 rocket successfully deployed Bluebirds 11, 12, and 13. And as CEO Abel Avalon put it, this launch truly demonstrates the progress of a network built for scale. Guys, these are the largest communications arrays ever deployed in low Earth orbit. With 13 satellites now operating up there, AST is proving that their launch mechanics and deployment strategies are functioning exactly as planned.
And let's just take a second to look at the technological leap they're making here. Their initial Block 1 satellites achieved peak data rates of about 98.9 megabits per second. But Block 2? These new arrays are over 3 times the physical size and are expected to push data rates approaching 200 megabits per second. Think about that. That is fast enough to support video calls and real-time data streaming directly from space to an ordinary, everyday smartphone. It's a massive paradigm shift.
But, hardware wasn't the only thing launching this stock into orbit. Just before that SpaceX launch, some news broke that sent AST shares jumping nearly 11% in a single day, capping off a wild 30% 5-day rally. A Meta executive revealed that they held a product workshop with AST to discuss running WhatsApp features like messaging, voice, video, and AI, completely off-grid using AST's satellite network. Now, crucial point here, this was just a workshop. It was not a signed contract. But hey, when a tech giant with 2 billion users starts exploring your tech, the market is absolutely going to pay attention.
Which brings us to Section 3, the Q2 Reality Check, Back to Earth.
Right, so as they say, what goes up must come down. Just days after all that launch excitement and the metabuzz, AST's Q2 earnings report came out and brought the hype crashing right back down to hard financial reality. Basically, they missed expectations massively. Wall Street was looking for a loss of 29 cents per share. The actual loss, 77 cents per share. That's a staggering 168% miss. And on the revenue side, they forecasted roughly $35 million, but actually brought in $31.5 million. Unsurprisingly, shares slid 4% in regular trading and kept right on dropping after hours.
But let's strip away the noise for a second to see exactly why that miss was so drastic.
A massive chunk of that 77-cent loss actually came from a single, one-time charge, $125.9 million tied to the BB-7 launch incident. Plus, they reported $63.5 million in stock-based compensation. So if you pull out those huge one-off items, the underlying business operations do look a bit different. However, the market, it doesn't always forgive those massive one-time hits right away, which pretty clearly explains the sharp sell-off.
That said, it wasn't a totally doom and gloom report. Get a load of this number, $1.3 billion. Despite the earnings miss, their revenue actually grew over 2,600% year over year. Now sure, that's coming up from a tiny base of just 1.16 million last year, but still, more importantly, their contracted revenue backlog, money promised from commercial partners and U.S. government awards, skyrocketed to approximately $1.3 billion. That is a massive financial safety net of future revenue, assuming, of course, they can execute and actually deliver the service.
All right, Section 4. High risk, high reward. Navigating the turbulence.
ASTS is honestly the textbook definition of a speculative high beta stock. You are investing in a company that is deeply unprofitable right now, but holds the keys to an absolute goldmine of upside potential if they pull it off. Just look at the valuation reality here. ASTS is currently trading at 347 times sales. The sector median is just 1.3 times, and it trades at 9 times book value, compared to a sector median of 1.9. What this tells us is that investors are paying a massive premium right now, essentially pricing in a tremendous amount of future success that hasn't fully materialized just yet.
And with that sky-high valuation comes some major red flags that retail investors absolutely must keep on their radar. First off, competition is fierce. You've got SpaceX's Starlink rapidly expanding its own direct-to-device capabilities, and Amazon's Project Cooper is looming right behind them. Second, the engineering and execution risks here are unprecedented. I mean, a single failed launch or a weird technical glitch can set them back years. Third, we've seen some substantial insider stock sales recently by both the CFO and the CTO, which, well, that's rarely an encouraging sign. Finally, the extreme volatility. With a beta of 2.76, this stock moves almost 3 times as aggressively as the broader market. Buckle up.
So how does Wall Street view this whole tightrope walk? Well, looking at the consensus, it is a highly divided hold. Out of 13 analysts, we have 4 buys, 7 holds, and 2 sells. And their price targets, completely all over the map. You have Piper Sandler initiating an overweight rating with a $100 target, while Deutsche Bank recently lowered their target to a $106 hold. The consensus is essentially throwing up its hands and saying, let's wait and see.
Down to our last segment, Section 5. What to watch next? The 2026-2027 roadmap.
If AST SpaceMobile is actually going to prove the bulls right and justify this wild valuation, there are some very concrete steps they must execute in the near term. First is the beta service launch slated for late 2026. If select carrier partners start successfully rolling out this service to actual users, that's a huge de-risking event. Second, Bluebirds 14, 15, and 16 are getting ready to ship. Third, and perhaps most importantly right now, management reaffirmed their 2026 revenue guidance of $150 to $200 million. Given that Q2 miss, you can bet all eyes will be on whether they actually hit that target. Finally, looking slightly ahead, they're aiming to have roughly 45 satellites in orbit by early 2027 to truly blanket the globe.
AST SpaceMobile is trying to do something that could fundamentally alter human communication forever. Connecting the unconnected and eliminating dead zones worldwide is a noble and, frankly, a highly lucrative goal. But the physics, the finances, and the competition, they are totally unforgiving. So what do you think? Will AST SpaceMobile revolutionize global connectivity, or will its massive risks just bring the whole thing crashing down? It is a genuinely fascinating stock with enormous upside and an equally steep downside. I would love to hear your thoughts on this. Are you bullish or bearish on ASTS right now? Let us know. And as always, keep learning, keep analyzing, and we will see you in the next explainer.